There is actually a way you can exit your trade to give you the maximum profit or to avoid losing what you have already secured in the market. And I was in a live session today. It was early in the morning, and I was sharing how I exited this particular trade, this one by your left hand side, and then how that this particular trade formation was ready for pushing up. Now, but there is something very powerful I want to share with you in this video, and that is the fact that to also become a professional trader, you need to understand how to exit your trade. Now, some of you have done good and have done well in understanding entry. You have mastered your entry, but then what will finally give you maximum profit and help you secure all the profit you're supposed to make in the market is exit. And not many people talk about trade exit. That is why I want to show you in this video how to exit your trades like a pro. Now, before I go deep into that, we have to go back to the basics of price movement. If you understand how price moves, the rhythm of price, you will be able to understand what I'm teaching you in this particular video. Now, take a look at this. Have you realized that if price is printing this kind of a price action, we have a downtrend, right? This is a typical example of a downtrend where you have a series of break of structure, break of structure, break of structure, break of structure. Now, what breaks of structure implies when we have a trending market is that price is interested in pushing down. Yes, price is interested in pushing down. And then when price at any point in time decides to shift structure, it means we're about to see the end of this downtrend. I am going somewhere. Just follow me through. Now look at this. As price was coming down, we have a massive downtrend. At a point where price reached this area, we have a shift in market structure, otherwise known as change of character. All right. Now, whenever you see a change of character, note this. It is an establishment of a new directional movement. All right. That means if you are in a trade, for example, now here is the secret. If you are in a trade like this, let me show you. If you take a trade from here and you are targeting somewhere here as your target, for example, and price started moving to your target, but then at this very point, price shifted structure before coming to your target. It is calling for your attention. All right. It is calling for attention. Especially those of you who are trading intraday, you have to pay attention to this because at the end of the day, you will be in a trade. It has entered profit to a point you're supposed to close, but then only for you to remain in that trade and boom, you're out of it. All right. And then boom, you're out of it. So if you're targeting a specific realistic target, let's say for an intraday, I'm trading the London session and I'm targeting 30 pips. That is the maximum I can target when I'm trading the London session. As price starts moving to my target, if I end up having at least 25 pips instead of 30 pips and then I have a shifting structure, I will just close it. Because I know that the range is around 20 to 30 pips. So if I see that shifting structure, it is possible that price is going to come back. And I don't want to lose the money I've already secured. You now see it. That is the same thing that happened here on this particular trade. Now, going back to the simple analysis here, look at this. The entry was here. I actually took this trade from the 15-minute time frame. When you look at it carefully, you're going to see a nice price setup. A nice price setup. Look at this. Here. Let me just give it a replay so that we'll see this coming in very handy. Right. So look at this. A fair value gap, right? Another fair value gap inside. That's a balanced price range, right? When you have two fair value gap confluencing, it becomes a very powerful confluence. That is a balanced price range. Now price came into this area, which is our point of interest. Want to take our trade. Some people will activate the trade the moment they see it from here. Some people will wait for a confirmation No matter how you want to do it, the goal here is exit. It's not about that. Now, if you are taking this trade from here, actually the way I took it, I waited for a shifting structure on the lower time frame, actually before I took the trade on the lower time frame from 5 minutes. So I took the trade from here, all right, after having a shifting structure price coming back right up into that area. This was the shifting market structure on the 5 minute time frame, and I saw this massive displacement market structure. All right, I'm going somewhere, just follow me. I want to show you something. Remember, point of interest, shifting structure, price coming back right here, and boom, I'm in the trade. Now look at what is happening. As price starts going, it will start creating a break of structure. You see it, BOS. That is what? Trend continuation. Up until that time, I have a downtrend, which I will expect to trade right into where? The draw on liquidity right here. But I have to be careful also and read the rhythm of the market. And that is the goal. The rhythm of the market. As price is moving, let's see. Will I have another break of structure bearish? No. Instead of another break of structure bearish, what did I see? A shift in market structure. Do you see it? A shift in market structure. And that is exactly what I wanted to call your attention for. So the moment, if I am in this trade, the moment I see this shift in structure, as a wise trader, what I'm supposed to do is to take what I have at that moment so that I will avoid getting stopped out. The moment price shows you this, is another movement coming back up. It will target your entry or your stop loss. Do you understand this? Now that is the goal of teaching you these things. When you take a trade, at some point when you have a shifting structure, it means you need to exit it. All right? You need to exit it. For example, somebody that took trade from here maybe had a break of structure, then shifting market structure. Imagine you are in this trade from where? From here. For example, I'm just giving an example. From here, and my stop loss is here, I'm targeting somewhere below. Just because price has traded into here and not reaching my target, and I saw this shifting structure, I'm supposed to leave the place quickly as possible, as fast as possible rather. You take your profit and leave it, because price may most likely not trade here. Look at it. Price came back all the way here. If you are break even, you are gone. Do you see this? So the moment you see that shifting structure is an indication that price is about to turn direction and target your entry, or whatever you have there as a break even entry. If it is here, somebody like me, I will have broken even by now. All right. But then the moment I saw this, it's better I close with the little profit I have. And that is why when I have a lot of trades at the end of the day, I will discover that I have a decent amount of money realized. All right. So right here, we have a shifting structure and price is about to start going up. And this is a buy setup, actually. Buy setup. A bullish mitigation block. Price is coming right to it and it's going to trade upward. Yes, that's exactly what happened. Yes, you see, price came all the way and it happened that way. Imagine you are still in this trade, you will have been stopped out. And that's the story of many people. That is exactly the story of many people. If you go through your chart, I just want you to go through your chart and see whether this thing is true or is not true. Every time you have price going in your direction and you have a shifting structure, avoid it. Let me see if I can see another entry, perfect entry. And let's do an example with it. Where can I see that example? Okay, let's take this for example, this particular area. Let's say you took this trade for a bullish movement somewhere here, and your target is somewhere right up. All right, somewhere right up. Look at what happened. The moment price came here and shifted structure, what did you see? Price came right down here. So every time there is a shift in structure from a particular movement, avoid it. Just leave it. Just leave it, because it is possible that price is going to target your entry back up. As price was coming down, no shift in structure, came down, and there was a shift in structure here. What are you supposed to do? To exit. If your target was somewhere here, exit from here. Look at what price did. Came back up right from here. So it is important you take notice of this. At this moment, I want you guys to take a look at this YouTube channel. If it is something you would want to keep growing, go ahead and give it a like and give it a share. Invite 5 of your friends to come and subscribe to this YouTube channel. For all of you that are watching this particular video, I'd like to see you invite your friends, and I'll be happy to host you here and share more knowledge with you as we progress in this learning. Thank you very much, guys. It's my honor to have you guys here. I'll come your way next time when I have another video. See you next time.